Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Let's take a look on the gold market. In the short-term picture, we have approximately the same situation as in the euro. Some bullish patterns have been formed. At the same time, fundamental background for the gold market stands relatively positive. So, as you know, some agreement has been achieved between Donald Trump and Xi Jinping in a recent meeting and the G20. And we do not know the details, but informed agencies tells that some progress has been achieved in the negotiations on the mutual trading between the China and the United States, and that will be positive for gold market probably because it will hit the dollar. Because as you know, on Fridays was some risk aversion and was demand for the United States dollar before the eve of the negotiations. But right now it will be some relief and maybe some sell-off will follow on the United States dollar, which should support the gold market. Second moment, the comments from the Jerome Powell, that's the Federal Reserve hawkish policy could be eased, and also will be dollar supportive. We do not know yet the details, what really will happen, but currently the sentiment of the market has changed significantly, as we have mentioned yesterday in the report on the euro currency. Market right now expects just single rate increase in 2019. That's much less than it was anticipated previously. People mostly talk about the 3 rate increase in 2019. Finally, the next driving factor is the stock market. So today the Fed Consulting has made a release on the stock market, and they suppose that market stands near the reversal point. And as you know, there's a significant relation between the gold market and the stock market. Once the bubble blow on the stock market, money flows into the gold. When the bubble will be released, the market starts new trend, new cycle repeats, and this money returns back to the stock market. So within the few years, probably when there will be downtrend in the stock market, gold will have the support. So everything, situation stands not bad for a gold market from the fundamental point of view. On the technical point of view, still stands an upside retracement with this channel. And here are some moments should be clarified. First of all, we have the bullish context still, although in the recent couple of weeks, market can't show the significant upward continuation, but it stands rather tight and forms some bullish patterns. So first of all, we see the bounce up from the lower border of the channel. And this stands as a confirmation of the bullish setup on the market, but still, this is also the risk factor. Because normal market mechanics of the bullish market suggest that here market should continue to move higher, because what we have, extension mode, contraction, so retracement, extension again, so we see the thrusting action here, contraction, so major retracement already has happened. That should be another extension leg. And if market will not be able to continue upward action here and starts dropping lower, taking out of these lows, and if even it will break the trend line, this will be the sign of weakness that tell you that something is wrong with the bullish context. And that could lead to appearing of a huge amount of bearish patterns. First of all, most close patterns is the ABCD here, but in a wider perspective, larger perspective, it could be a huge butterfly pattern with this left wing starting and downside right wing. That's really what could happen. That's why the price action and price behavior with this trend line support with these lows is extremely important for a short-term perspective. If everything will be good and market indeed will be able to continue to move higher, we are watching for the next destination points, our XOP target around 1260. Recently, on Friday, we've got the bullish grabber here, and also we have talked in our video about this fast return right back up after the Jerome Powell words have been since rebound on the gold market. And these two patterns extremely important for intraday trading and price behavior in the next week. Because take a look what we really have on the 4-hour time frame chart. First of all, we have the grabber itself, so it's also important. And on the 4-hour time frame chart, we have multiple patterns. First of all, our kind of the reverse hand shoulders pattern. From that standpoint, these lows are also important because the market will take out of the lows of the reverse hand shoulders pattern. It will suggest that the market should take out of these lows. And that will just confirm our suggestion. And this possible breakout stands in agreement with what I have just said about the market mechanics on the market bullish mechanics. So it should keep these lows. Breaking of these lows will turn daily tendency in opposite direction, and also it will be confirmed by the pattern that we have on the 4-hour time frame chart. So that's why, as you can see, these very important lows. So here we have multiple patterns. First of all, our initial ABCD pattern with the XOP around 1240. Second will be larger ABCD pattern with 1245 target. It's based on the hand shoulders. And take a look, the final stage of the hand shoulders could take the shape of the butterfly. It also has the 1618 extension of 1240. It's a very good agreement between the targets. If you remember, yesterday we have talked on the euro currency at the same setup. It's also could be the butterfly could be formed if lows will hold on the market. So that's important. On the hourly chart, we have retracement of the smallest recent upward direction. We have talked about it just to keep the harmonic action that we see on the market right now. So take a look. Here is mirror reflection. So if we will separate this in two parts, this could be the almost similar action. You can see downward action, upward action, retracement here, upward action here, upward action here, and here's downward action. You can see here is also drop. So it was a bit greater than we have suggested. So we talked about the 1218, the 618 support and the OP target, but it was slightly lower. Anyway, market is now turning up. So talking about the hourly picture, guys, I would say that a market should either start upward action right from here, or chance on the failure of the bullish context will be significant. Although we have here the XOP target 1214, and if market will drop it, it will not harm significantly to the bullish scenario. But guys, just should understand where market stands. This is agreement support. So this combination of the ABCD target and 618 support. This is a stronger area than just a single XOP. So if agreement area can't hold the market and trigger the upward action, far less XOP target alone could do this. That's why I would suggest that if market indeed stands bullish, it should continue upward action right from here. So overall construction relatively simple. We see definitely the invalidation levels, invalidation points. So particularly speaking, 1211 lows. It's very important. Until market stands above them, the bullish context stands valid. But if market will start dropping and breaking 1211, this context will turn to bearish. So it means that while we stand above these lows, we could keep an eye on and try to take the long positions with the hope that the market will continue to move higher. When the 1211 lows will be broken, it changes the direction and no long position should be taken. So that's what we will do on the next week on the gold market.